Our next topic of conversation brings three speakers onto this stage. So please put your hands together and welcome the former Riot Games president and CEO of Garena and partner at BITKRAFT, Jin Oh, and two principals on BITKRAFT's investment team, Jonathan Smedley and Justin Swart.
Big L, rest in peace. Rest in peace. Mess with this. One of the best yet. We've got it.
Thank you so much. Today, we're going to do something a little bit different at the BITKRAFT Summit. We haven't really done a fully fledged markets outlook before at the summit, and we're going to take you through a little bit of the way we think about things at BITKRAFT and give you a taste of how we view the world, particularly with a focus on the gaming industry. I'm going to be speaking about the macroeconomic environment and its impact on public markets. My colleague Jin is going to talk about the downstream impact that has on venture markets, particularly in the gaming space. And Jonathan's going to take us through some select trends in gaming that we find quite interesting. So we're going to move from the macro all the way down to the micro. We're going to go from an investor-centric view of the world to a product-centric view of the world. So, a recap of 2023. What happened? It was a really tricky year for market participants. We saw the Fed funds rate increase to levels we haven't seen in a very long time, but particularly interesting was the rate of acceleration, the velocity with which the US Federal Reserve increased interest rates. Equities markets responded as if the worst is perhaps over. The S&P 500 is up roughly about 20% on the year, but what doesn't tell the full picture there is that these returns were largely driven by a handful of names, the proverbial Magnificent Seven, names like NVIDIA, where a lot of market participants were putting their money behind quote-unquote safe names, riding the large language models wave, or the AI wave, as it were. Similarly, if we look at crypto as a, proxy for risk, that was also up about 40%, but again, doesn't really tell the full picture. This was really a story about illiquidity, about liquidity moving into safer havens, and thin order books causing a lot of volatility in these markets. And this is going to be a theme of this presentation, where really you're seeing market indicators that look at sort of face value, like we're recovering off some kind of bottom, but actually it doesn't. We're not really sure if we're just out the woods just yet. So let's walk through why that is. Over on this slide, what you'll see is some polling done on the Philadelphia Federal Reserve, where they ask, for the past 50-odd years, they've asked the Federal Reserve what their probability is of a recession in the next 4 quarters. And what you can see from the graph is that this rate has never been higher. They've never been more certain that a recession is coming in the next 4 years. And so what is the consensus view? The consensus view is that this is going to force the Federal Reserve's hand to cut rates. But we're not so sure. And the reason for that is that if we look at this, it's a bit small, but this sort of stunning chart that we see over here is what this does is plot the futures curve of the federal interest rates over successive time periods. And what's interesting is that throughout the 2020s up to 2022, we saw that the market was not expecting the interest rate to rise for some time. As we moved into a rate hiking cycle, expectations changed, and when we got to the middle of that cycle roughly, the expectation was that rates would remain at roughly between 2 to 3%. But of course we know that the market got that stunningly wrong, and so we asked the question, now that we're at the presumed peak of the cycle, and as you can see the futures curve sort of trending downward quite rapidly, we asked the question, is the market underestimating inflation once again? Is this time really different? And the reason we think that is because of a macroeconomic indicator we look at quite a lot that is a reasonably good proxy for economic growth, that of the oil price. You can see that the price has climbed about 30% since July, while implied crude demand at the US gas pumps has never been higher. And what this is really showing is that there's perhaps this undercurrent of strong demand that's not really being reported on effectively or understood or appreciated by the market. At the same time, you have supply on the oil side. Supply continuing to fall, where on the left-hand side, you'll see that OPEC supply has fallen since about 2016, while US crude oil production hasn't reached its 2020 peak. So again, there's some structural issues that are also not shown in the slide. Things like a lack of refinery capacity for diesel, the lifeblood of commerce and industry that we can have sort of a longer discussion about after this call, as well as the Biden administration depleting the strategic petroleum reserve levels, which I believe that they sit at about 14 weeks left of oil in the SPR, and this was being used as a way to kind of combat inflation so that it doesn't hit the US consumer as hard. So a lot of structural things pointing to a lack of oil supply in the market. There's also some indicators that are remaining pretty stubborn. Labor markets are remaining sort of quite strong. On the left-hand chart, you'll see that unemployment insurance claims are down since about February, while inflation is just remaining stubbornly high. I think there was an inflation print while we were here at this conference that seems to point that inflation is accelerating once again. So what does this mean? Wall Street is just divided on what's going to happen in the markets. And you can see on the chart on the left that the difference from Wall Street analysts between the top end of where the S&P 500 is going to be to the bottom end is never been higher. And so it's just a really difficult market to operate in, and there's a lot of uncertainty out there. So what does it mean? The economies that we like to look at BITKRAFT typically revolve around game economies and virtual economies. We do think that rates are going to remain higher for longer. We think that there's structural issues around inflation that are being underappreciated by the market, and this is going to have an impact, a downstream impact on the venture markets, particularly in the gaming industry that my colleague Jin is going to talk about further. Thank you.
Who got the keys to the Jeep? I'm driving to the beach. Top down, loud sound, see my peeps. Give them pounds now, look.
Hi, everyone. My name is Jin Oh. I'm a partner at BITKRAFT leading the Asia Pacific practice. So what I'm going to talk about is the state of investment in games. So I'm going to start off with the bigger market. Let's start with a macro. The venture market has really fallen recently, right? So if you look at the graph, what's happened is that during the pandemic years, the investments went up. And the blue bar graph shows the dollars that went in. The line graph shows you the number of deals, but tells the same story, right? Peaked during the pandemic years, and it came down in 2023. But what's interesting is that it's at similar levels as the pre-pandemic years, right? So it's not all gloom and doom, it looks like. So now that we talked about the overall market, let's zoom in on video games. So this is number of dollars that actually went into video games. If you look at the pattern, very similar to the overall market, right? And also, if you look at the level it is today in 23, it's actually slightly higher pre-pandemic levels. This is number of deals. Very similar pattern, right? So we're sharing a similar story where it peaked and it came down, right? I'm going to sidetrack a little bit here to share a story about a very exciting region, a region that I'm really passionate about, which is Asia. If you look at the graphs here, it tells a very similar pattern as what we've seen in the overall gaming market. But why I'm excited is the fact that the investment deal value in Asia is about half of all investments that go into gaming. I don't know if you knew that. And even number of deals in Asia is about half of all the deals globally, which is pretty incredible. And also, in fact, interesting enough, about 75% of the gamers are in Asia Pacific as well. Now, I mention this because I think BITKRAFT now really has footprint in the Asia Pacific region with myself and John. We're really building out that practice, right? So we've really become a truly global firm. And by the way, there's a session tomorrow morning where we talk about our investment thesis in Asia and our strategy. So if you're interested, I really encourage you to join us tomorrow morning. So we talked about equity, and some of you guys are wondering, what about crypto, right? So of the consumer application investments in crypto, a significant portion went into games, by a mile, as you could tell here. So far we talked about the investments, how it really peaked during the pandemic years, came down a little bit. So what does this mean in terms of gaming, in gaming investments? Overall, it's tough. And a lot of the startups here, I know you guys are feeling it, right? The climate has changed, the sentiment has changed, and with sort of the perception of potentially a recession looming in our backgrounds, it is really impacting how these startups are getting investment. I want to show you some interesting facts here. I want to qualify by saying this is from Carta, so it's not comprehensive of all the data, but it is directionally very relevant, right? The chart on your left shows you the number of startups that actually shut down. So from 22 to currently, you see this increasing. In fact, compared to 21, it really doubled, right? And this is primarily driven by the fact that it's really darn hard to get funding, right? So what's happening, right? What are startups doing? So they're going after bridge rounds, right? So this chart on your right shows the percentage of bridge rounds that are happening. So you see that going up north, right? So that's what's happening, right? Now you're thinking, okay, it's a relief to even get funding, but that doesn't tell the whole story. If you did get funding, we're seeing a lot more down rounds, right? To your left, this is the percentage of companies that are actually getting down rounds. So from 22 up to 23, you're seeing a upward movement, right? So right now what's happening, according to this data from Carta, 1 out of 5 companies are actually getting a down round, which is really tough, right? And if you're an investor in those deals, it's also tough. Now, with every story, there is also the other side of the coin, right? What does this mean for the investment climate now? It's actually pretty friendly. So if you look at the graph on your right, it's pretty favorable. Now it's an eye chart, but whether that is liquidation preferences, participation, cumulative dividends, it tells a story where, for the investors that are investing now, it's actually not bad. Interesting graph here. This is a chart of the US IPOs per year. Now I'm going to use sort of a farming analogy, if you will. If you look at the round red circle there, what that shows is those are fallow years, right? And then it's followed by years of harvest. Fallow years, and then years of harvest. So these are cyclical. We see a pattern here, right? Take a look at 22. What does that look like to you? To me, it looks like a fallow year, right? So if history is an indication of the future, what that tells me is that in the not too distant future, we could potentially see harvest years, right? So I'm going to summarize all this. So investments in gaming and overall have increased. 21, 22 came down to 23, generally at the similar level as pre-pandemic years, right? And now this is the tale of two cities, right? Like anything else. It's tough for startups and some of the investments we made as investors, but on the other side, we see some favorable conditions. So what's the so what? Right? In the immediate term, and potentially some years to come, we could possibly see some of the strongest vintage years as investors. That concludes my section. I'm going to call on my colleague, John. Thank you.
Hello, hello. Hello. Hola, hola, hola. Hi, everybody. Buenos días, damas y caballeros. Bienvenidos a Lisboa. Mi nombre es Jonathan y es un placer conoceros a todos. If you didn't understand what I just said, it's fine. That makes it two of us. But with my skillful use of Google Translate, I now have all your attention. I wanted to give everybody a warm welcome again to Lisbon. I know it's been a long day with many meetings. I wanted to keep this like a presentation lighthearted. So in the next segment of the presentation, I'm going to keep it fairly short and sweet. Keep it fairly interactive. Feel free to interact with me. And if you enjoyed the presentation, please sing my praises to the GPs. If you don't enjoy the presentation, please keep it to yourself. Without further ado, let's begin with the presentation. So the state of video gaming, I only have 15 minutes to talk about the entire state of video gaming because I wasted a lot of time cracking jokes. So we wanted to just highlight that we will not be able to talk about every single thing that's happening within video gaming. It's just not realistic. But there are two things that we want to talk about. The first thing is a framework as to how to think about video gaming. And the way we think about it is very broadly, you can consider the gaming industry to be comprised of three primary participants. On the demand side, we have the users. On the supply side, we have the people creating games, the companies. And on top of that is a capital markets layer that dictates the capital flow into what is actually being innovated on, what are the opportunities that get funded. Now, my colleagues Jin and Justin have spent a considerable time talking about a capital markets layer. So in this next segment, I really wanted to talk about, despite all this financial turbulence and uncertainty, what exactly is happening on the ground? Do people still play video games? What are some kinds of innovations that's happening? If we want to talk about all the innovations that's been happening in video gaming, we would probably take another 8 hours. I would have to come up with many more jokes. So I will only be highlighting two interesting trends within video gaming today. But before we get there, let's go into what exactly is happening with end users. Now, many research sources and data have been highlighting how people have been worried that post-pandemic, we are actually going to see engagement come off due to the COVID-induced highs that brought in a lot of people into gaming due to greater disposable time. And that was a primary worry over the past couple of years. But I just wanted to remind everyone that engagement, which tends to lead monetization, has basically remained fairly flat post the pandemic. And since engagement leads monetization, it is perhaps not surprising that many of the consumers still continue to expect spending more within technology and media spend categories, and obviously with gaming as one of the main platforms there. Why exactly is this happening? The pandemic essentially has resulted in a slight rebrand of video gaming for many people that were brought into video gaming. 20 years ago, when I told my friends that I was gaming, that I loved gaming, the general response I got was, bleh. Today, it's slightly more cool, I think, and more importantly, with the younger generation, they're starting to view gaming more than just gaming per se, but it actually incredibly resembles more like a social network. If you consider what was happening over the past 2 years, many people stayed at homes, there were shelter-in-place arrangements, they couldn't go out and meet their friends. But with video gaming, that was like a primary source of socialization for many children, myself included. And we're starting to see gaming enter mainstream pop culture. Movies that were based on video games were not popular 5, 10, 15, 20 years ago, but increasingly we see them gaining tremendous traction in the box office. And finally, we just wanted to touch very quickly on the Web3 side of things. Although NFTs have received a tremendous amount of flack from people who have thought that NFTs are primarily investment vehicles, what is interesting is that awareness and participants of NFTs have both increased. And if you look at the next page, I think this is the one that's most interesting to me. The people who actually perceive NFTs as an investment has come down by about 25 basis points. And more interestingly, like non-endemic use cases for NFTs, such as the display of digital items, collection of digital items, support for favorite creators are starting to grow. So that is like the segment on what's actually happening on the user side, and I think it's very clear that the secular tailwinds for user growth is growing fairly robustly and for a long time. On the next two segments, I think I'll talk quickly about AI, which there are plenty of panels today and today and tomorrow that will be talking about AI. So I won't cover everything; it's impossible. I just want to highlight some things that we at BITKRAFT think is fairly interesting. So I think when AI first emerged as a tool to supercharge gaming, the mainstream opinion was that, hey, AI is really going to democratize content creation. You're going to be able to do more with less. As much as that is a fascinating and important developmental point, the idealist in me wanted to see more with AI, and what really excites me is the fact that AI is able to enable new types of games and push the frontier of possibilities of the kind of games that we can play. What are some of these examples? So this is a great time to talk about our portfolio company, InWorld. So InWorld is innovating on the AI digital agents for NPCs. As all of you here know, NPCs generally have the same thing, the same script that they say. They don't change their behavior that much. But with InWorld, what they're doing is that you can increasingly, and in the picture on the right, you can see that's a screenshot from Skyrim, is that you can actually interact with these NPCs. And these NPCs will actually have different personalities and character based on what you assign to them. They will have memory of what you have asked them. And this all makes for a fairly novel way of consuming entertainment. In the world of video gaming, you often see people, the completionists among us, look for alternate endings within video games. So that's why you see that screenshot of the Ghosts of Tsushima secret ending. But with AI, this could be a thing of the past. Now consider that if you play a solo RPG and 1,000 people play a single RPG, you'll find exactly one ending, if there were no alternate endings. But in the future, with the advent of AI, what is potentially going to happen is one person playing one RPG can find 1,000 different endings. And having alternate endings will increasingly be a thing of the past. That's what we've covered under adaptive gameplay. And under adaptive difficulty, now why this is important is because a big part of ensuring that your gamers remain engaged and enjoy the video gaming experience is that you keep them in a state of flow. And a state of flow is when the level of difficulty in the game matches the skill level. Now, there are many masochists amongst us in BITKRAFT that enjoy getting tortured in the Elden Ring, in Dark Souls games. But for the broader public in general, being able to keep users in a state of flow is incredibly important capability of AI. So once again, I can't talk about everything in AI. This is a work that we have. This is a topic that we have done a ton of work on. You can see a short summary of some of the ways which we think AI is going to affect areas within gaming and what are the implications. Feel free to grab any of us if you see us around, and we'll be happy to have a deeper conversation with you. Now, VR and AR. So there was actually a panel on AR and VR prior to this, so I'm not sure how many of you were here and listened to everything. But why we wanted to highlight AR and VR is that I used to work at Temasek doing TMT growth equity investing, and ever since I was there, the general consensus, the worry from many people that doubted the future of AR was that, hey, VR, AR has been the next big thing for the past 30 years. Like, why should it be the next big thing now? Why we want to highlight this is the importance of innovation within gaming despite financial turbulence, despite financial uncertainty. And most importantly, we're starting to see VR, AR is achieving many critical milestones in the VR flywheel. Most important of which, and I know there's a lot of words there, but just focus on the final point at the bottom, is that Apple has also entered VR. I've named it as XR, extended reality, but let's just keep it simple and refer to this as VR. But Apple's entry, as well as big tech players' entry into new platforms and new tech, generally has led the mainstream adoption of users, and we see it right here. So despite all the negative sentiment that VR gets, we have seen a ton of money being invested into VR. We are all familiar that Meta has been a very big investor into VR technology. Apple has come in as well, so has Google, Sony, Microsoft, ByteDance. And despite the uncertainty, you can see on the chart on the right, the sustained growth in VR investments is very clear and undeniable. Which is why this is resulting in Newzoo estimating that the install base is growing faster than ever, and revenues within the space is expected to double within the next 3 years. Now, obviously, there are still many issues that VR has to overcome in order to achieve mainstream adoption, but one of the more interesting learnings that we have had starting VR is non-gaming use cases for VR have actually been growing. So if you consider the perception of VR as a headset maybe 5 years ago, the primary honeypot for new users into VR is I want to play VR games. And what's interesting is many people who have ended up buying VR headsets are increasingly finding that there are many non-gaming use cases that the VR headset is very suitable for. And with this increase in the use cases that are non-gaming related, we potentially are getting closer to bridging the chasm between the early adopters and the early majority. And as we all know, that is usually when a new technology achieves escape velocity. So that's all I had today. The takeaway was really I want to have a more positive take on what's actually happening in gaming despite all the financial uncertainty. I'm like the positive vibes guy. So long-term circular tailwinds are still intact on all three layers, on the users, on the founders, on the businesses, and the technology that's being innovated on. And regardless of the market conditions, we continue to see very strong innovations across many aspects in gaming. And for that reason, we continue to believe that gaming will only continue to increase and become a more important part of our lives over the next 5, 10, 15 years. Thank you, everyone.
Say wow, wow, wow.